And welcome back. Thank you so much for joining me in today's video because home buying demand has hit rock bottom. Take a look at this. A new report from the MBA just posted on August 23rd here. It says applications for home loans decreased by 4.2% compared to 1 week ago. This includes refis plus purchases. So the refi index decreased by 3% from the previous week and was down by 35% from a year ago. Of course, this makes sense because rates are so much higher now compared to a year ago, up by about 1.8 percentage points over the past 12 months. That makes sense. Here is something that I personally follow on a weekly basis though, because here is a look at the number of people submitting applications for home loans to buy houses. So these are purchase applications. The seasonally adjusted purchase index by the MBA decreased a whopping 5% from last week, and it's down by 30% from 1 year ago. The reason why I say this is a big decrease is that I've been seeing decreases in the range of 1 to 2 to 3% each and every week here, but 5% is a big decrease in applications for home loans, which makes sense given the fact that rates have been increasing so much, right? But it decreased by 5%. But more importantly though, there's actually two things I want to mention. Number one, this marks the 6th consecutive week of decreases of purchase applications. And on top of that, it now has decreased to the lowest levels going back to April of 1995. I mean, can you see rock bottom? It's just absolutely crazy. Anyways, according to Joe Kahn, who's the MBA's vice president and deputy chief economist, he stated the following: Treasury yields continued to spike last week as markets grappled with ill liquidity and concerns that the resilient economy will keep inflation stubbornly high. This spike in Treasury yields pushed mortgage rates higher last week, with a 30-year fix increasing to 7.31%, the highest level since December of 2000, which I've been talking about on the channel, right? Basically a 23-year high for average rates right now for people with great credit, 7.3%. It says here, I actually highlighted in green here because this is a big applications for home purchase mortgages dropped to the lowest level since April 1995 as buyers withdrew from the market due to the elevated rate environment and of course due to the erosion of buyers' purchasing power, which I've been talking about on the channel for quite some time now, right? So the level of applications for home loans to buy houses now officially dropping to the lowest levels going back to April of 1995. I've been talking about on the channel here that applications have dropped nearly to the lowest level since 1995 because we had a big decrease back in February this year, but actually now current levels right now are actually below levels this February, going back to 1995. Absolutely crazy here. So what does this all mean here? Because we're seeing a lack of people submitting loan applications to buy houses, this would imply that closed home sales in the months ahead will also decrease as well, because we can't see a giant decrease of applications and see a giant increase in home sales, right? That makes sense. Some other things I want to talk about in today's video, because this is a very early indication of home buying demand or lack thereof, is this right here. Here is the National Association of Realtors Central Lock Home Showings report for July, just posted, I think it was today, if I'm not mistaken here. So Central Lock is a lockbox company that a lot of real estate agents use in order to show houses to their buyers here. So to be exact, let me just scroll down here. Central Lock lockboxes are used in roughly a third of home showings across the United States. These are real estate agents showing houses to their home buyers. And they access this using a Bluetooth device on the lockbox. You can have an app on your phone, type in your code. If you're near the lockbox and the lockbox opens up, you get the key out of it, open the door for your home buyers, right? It says here, of course, this is a very early indication of closed home sales in the months ahead here, because it says foot traffic or home showings has a strong correlation with future contracts to buy houses and home sales. So it can be viewed as a peek ahead of sales trends 2 to 3 months into the future. That's why I want to share this in today's video, because rather than looking at, closed home sales, and of course, home sold prices. That's a lag indicator what our housing market was like 1 or 2 months ago. But in today's video, I'm going to focus on some very early indications of home buying demand so we can kind of gauge which direction we're headed here. But it's not looking very good here, right? So on a national level, central lock home showings were down by 4% year over year. This is July 2022 compared to July this year. It says home showings decreased in 3 of the 4 major US regions. So for example, the Northeast fell by 17% from a year ago, the West decreased by 9%, and the Midwest fell by 8%. In contrast, the South saw a gain of 4% year over year. And by the way, here is a picture of that lockbox there. It's Bluetooth enabled. You also can enter in a code as well. And that's one reason how they can track real estate showings across North America, or actually across the US. But speaking of home showings across North America, here is showingtime.com. The most recent stats they have for us is actually August 22nd. The week ended August 22nd, I should say. So this year, we saw a gain of 2.2% in the number of real estate showings compared to the first week this year. Compare that to last year, it was a decrease of 6.2%. The delta on that is 8%, right? Compare this to about 1 month ago, which I shared with you guys in a video from a few days ago. So 1 month ago, the number of real estate showings increased by 12% this year compared to a 3% decrease last year. The delta on that is what? 15% or 15 percentage points. So the difference between last year and this year is actually getting narrow. As you can see here, the number of real estate showings in 2022 in orange there is decreasing at a faster rate compared to last year's levels. So I'm really curious what the rest of the year is going to look like because we've been seeing more real estate showings this year compared to last year, really ever since mid-April this year. But again, the delta between this year and last year has been narrowing. So I'll definitely keep you posted with the latest developments on that. I also want to share this with you guys as well. This is the number of people searching for homes for sale on Google here. And the index right now is at 85. 1 year ago, it was 97. So compared to just 12 months ago, the interest for people searching for homes for sale decreased by about 12 percentage points. I also want to provide an update regarding rates today, which is August 23rd here, because I actually wasn't even aware of this because rates have been increasing so much, right? But rates have been increasing ever since August 9th this year. So rates have been increasing for more than 2 weeks every single day, which is absolutely crazy here. As you know right here, rates have increased for 2 weeks straight. The average 30-year fix, according to the Mortgage News Daily, as of August 23rd, is 7.36%. It actually decreased from 7.49% from 1 day ago. That was the first time that rates have decreased since August 8th this year. Also, as a note right here, rates have only moved lower compared to the previous day 3 times during the entire month of August. Absolutely crazy here. Average rates at 7.36%, a fairly big decrease of 13 basis points. But again, rates have only decreased 3 times so far in August, which is absolutely wild here. Jumbo loans at 7.35%, and FHA and VA loans are around 7% for people with great credit as of August 23rd here. So looking at daily rates for a 30-year fix, 7.36%. 1 year ago, it was 5.73%. So a delta on that is 1.63 percentage points over the past 12 months. When we look at this chart above here, you can see this giant increase in rates. So last time we had a big decrease like we saw on August 23rd. The last time we had a decrease was a very small decrease of 2 basis points on August 8th. But rates have increased from 7.04% in August 8th, now at 7.36%, increasing every single day since August 9th this year, excluding August 23rd. I also like to share investedpa.com as well. So today's rates as well is vastly higher compared to the Mortgage News Daily. they're reporting average rates at 7.80%, again, for people with great credit, which is a very, very high, especially compared to the daily rate at 7.36%, according to the Mortgage News Daily. So I'd love to hear from you guys. What do you guys think was going to happen with the real estate market for the remainder of the year? Also, if you guys are a real estate agent or if you follow your local market, I would love to hear from you guys about what's happening in your neck of the woods, because stats I share in my videos tend to be on a national level, but of course, real estate is local and every housing market's different, right? So please leave a comment below. I'd love to hear from you guys. Hope you guys have an awesome day. Like and subscribe. Hope you guys have an awesome day. I always said that. Hope you guys have an awesome day and look forward to seeing you on the next video.